All right. Good evening, mentorship traders. 11th of March 2020, 8:30 p.m. our Wednesday evening sessions as always. We'll talk about the markets for sure, like every week we do, but I would also take this opportunity to share with you that this COVID-19 thing that's doing the rounds worldwide is spreading, and that's the nature of the thing, and the virus essentially spreads. So it's doing its part, and I'll request you to please do your part also. Please try and stay as much quarantined or as much within your premises as possible. Take care of others, please. And let's stick to our age-old rituals of, holding both hands together and saying a namaste rather than shaking hands. This is one of the most easiest way it can spread, and various other things. Of course, you're intelligent enough to be keeping yourself updated. But I thought that as a mentor, it's my responsibility also to share and to tell you that please be a little more sensible and take care of yourself and others also. So a lot of uncertainty. That's exactly the kind of times that we are going through. Difficult times. It is surprised to see that every time something different can be the reason, but the outcome essentially is the same. So the markets are reacting to the possible uncertainty, what's in store for us. And we can see that worldwide equity as an asset class has corrected a lot, and money would like to now move on to safer assets like bonds and gold. Maybe those are the two easiest safe havens, US bonds and gold. Nevertheless, we need to talk about the markets. We need to understand where is the market right now and where it can, what we can expect. So I have the Nifty weekly graph in front of me, and it's a little cluttered because I have the Fibonacci levels drawn here. First, let's focus on this blue channel, and this time, of course, we have a valid, clear-cut breakdown, number one. Number two, if you allow me to draw a vertical length, a 90-degree length of this channel, so I can say that if I make it a copy paste, right, and if I take it down here, okay, so based on the length of the channel, we are getting a level downside close to 9440, 940, so around 9500. Let me delete this. And close to this 9500, I see this 9650 kind of Fibonacci retracement level, which is the 50% retracement. That's a confluence that we have in terms of the pattern target and the Fibonacci level. Right now, the market is bouncing from the, or I would rather say, finding some amount of solace from the 38.2 Fibonacci number over here. This one, which is, I'll take this level out, this is of not much use, which is the current close of 10,300 kind of levels. Strong downtrend, there's no doubt about it. Definitely a lot of traders, investors would have found themselves on the wrong side of the market. Any bounce backs that we find on the daily chart will definitely be utilized to come out of or to reduce the positions in the market. If we look at our horizontal supports, it is important to notice that the markets have broken all of them mercilessly, which is a clear sign that this market is not behaving naturally. It is out of fear. Okay, this is not a steady market where it is a healthy correction, or rather to say it's a technical correction. This is something which is spiked up by an externality. So respect of the supports are definitely not there. So it's going to it's gonna be wild on both the sides is what my sense is. Will 10,300 hold? I seriously doubt this. Maybe immediately, but not eventually. If it holds, it's good for us. But if we go purely by this channel width, it's taking us to the 50% correction, which is sub 10,000 level, and we're talking about 9,500, 600 for the Nifty spot. From a short-term perspective, I'll take you back again to the daily chart, and not much respite. It seems like today the market did try to bounce back a little bit thanks to a few large cap stocks, and even if it does, it might find some resistance here. But as I told you, in this kind of a market, it can do anything both sides. Levels will not be respected that much, so we just have to be on our toes. So concluding from the daily chart is it's oversold. Market stays oversold in strong downtrends. Bounce backs are possible. We should not negate it. Nevertheless, when it comes, it will face supply on the upside. So even if you're buying at lower levels, don't be extremely hopeful. You are, I would say, fasten your seat belts. You are heading towards a pretty good volatile ride ahead, maybe for a better half of this year. Weekly chart, we can conclude saying that the intermediate long-term charts have got damaged now. Convincingly, markets are at some kind of support, but other indicators don't suggest that this support can hold. If it breaks, we're looking at 9,600, 500 for sure. Bank Nifty, we generally do take a look at that index also. There you go. We will take this retracement out. This is a beautiful channel breakdown for the Bank Nifty. We should do the same thing we did for the Nifty by projecting a 90-degree vertical line. And if we take it down from the breakdown point, we get a level close to 23,000. We'll keep this for the Bank Nifty. I'll just increase the width a little bit. And we're looking at the levels of 23,000, close to 23,000. If you allow me, I can quickly drop a fib just to check if there's any form of a confluence there. Then it will definitely help us. And yes, it's got a 50% confluence with the fib as well. This level is what we are looking for if the market continues to weaken the way it is weakening right now. Now, my gut feel is something like the recent supports can be respected, in the sense can hold the index for some time. Serious selling going forward can only come on a rise and not on a breakdown, unless there's serious panic, that is margin selling, which is already there for the last couple of days. I did notice margin selling coming in, but it's a damaged chart. It's a confirmed downtrend on the weekly charts, and I believe that after 2008-9, a cycle of 10 years, 2020 is going to be tough. How tough or how bad, that time will tell us. I personally do not think that it's going to be as bad as 2008, because 2008 was more of an internal factor. 2020 is a mix of slightly internal and majorly external factors. So that's my sense. One thing, whatever has spiked up in the market due to the COVID-19 virus thing, once it starts to settle down, I think the markets will bounce back really sharp. So if you're going short, please be careful also. So our view on the market is definitely bearish. And as I've been sharing in my recent YouTube videos, please prepare yourself well for long-term investments this year. Please, if you're trading the markets up or down, that is long or short, please try and curtail your expectations and stay as short-term trades as possible, unless you're doing some kind of option strategies. All right. So that's our take on the Nifty and Bank Nifty. Nothing exceptional for sure, but let's take a look at your trades that you've done this week. I had a beautiful trade today morning on Indigo, which gave us immediate profits. I think in a back-to-back, like 15 to 20 minutes, we got a beautiful move down. I'll share that trade setup with you, but before that, as always, please start asking your questions and we'll take up this evening session as always.